Welcome to Fintech Daydreaming, the podcast that dives into the world of banking technologies and the ever-changing landscape of fintech companies. We bring you real-life examples from global and local thought leaders, as well as experts working within the financial industry, and seek out the best stories from the front lines of financial services innovation, where dreams of industry pioneers meet reality. Hosted by Pål and Ville. This is Fintech Daydreaming.
Welcome back, everybody, to yet another fantastic episode of Fintech Daydreaming. And as is traditional for us, every other episode is a Nordic highlight where we get the news articles from Helsinki Fintech Farm. And with Janne, we go through the details and share with you what we see as being interesting and the highlights of the last month. I'm Pål, and as always, every other episode, I am your host, but as always, I could not do this without my wingman, my comrade in arms, my best friend, my fintech extraordinaire, Ville. How are you, my friend, Ville?
I'm good. A bit tired, of course. We had a very active week in Stockholm this week. We went for the Mobey Forum meeting, and if you've been following LinkedIn, you can see that it's been a very lively meeting. So it kind of was meeting all the expectations that we had for a very fun event. Especially the Fight Club that I got to moderate was fairly colorful. So I don't think anybody will forget that. So yeah, again, it was a very active week, and now on Friday, I think it's good to cap the week with this fun episode with you guys and wrap the news side of things as well.
Yeah, no, I will absolutely agree. The Fight Club had two very prominent members of the fintech industry on there, but also with very strong points of view and dare I say a wide vocabulary that to the traditional people that are used to the Mobey Forum and our members meetings and the fight clubs, I think it gave them a fantastic experience. For the new members of Mobey, we can but potentially apologize, and if you do need any psychiatric evaluations after this, then please come to the next one. You will get used to it. We promise.
Indeed. So yeah, so we did definitely wake up the audience with the and towards the end of that first day's agenda. But again, something that people will never forget for sure.
No,
Is the vocabulary related to Monika somehow?
Yes, absolutely.
Oh, who could have guessed that?
She had to switch languages because she ran out of words in English, so she switched back to Finnish in order to complement the kind of full spectrum of things she wanted to say.
You know, there's a simple way of positioning this. The two people on the Fight Club was Monika and Anders Olofsson. In all of the history of Fintech Daydreaming and all of our episodes, the only episodes where we have had to mark it as having explicit content or explicit language in it is the two episodes that they have been guests on. So taking the two of them, put them on the stage to try and fight opposing views on a single, subject was colorful, immensely colorful, interesting, and I don't think I have laughed that much in a long time. But it adds to it that you know the personality of the people that were on the Fight Club. So if you don't know them, if you had no context, no history, no nothing, I can understand how some people potentially got immensely shocked by the activities.
Indeed. And do go back and listen to these episodes, by the way, if you're interested in these characters. So you can definitely hear maybe how colorful it was just by listening to those two episodes with Monika and then Anders a little bit earlier.
But yes, like you said in our last episode, Ville, we are spending an awful lot of time promoting Mobey Forum. I think it's about time they start sponsoring us in one way or another. But we are members of Mobey Forum. Ville and I do attend frequently to the members' meetings and contribute as much as possible. We're also both the co-chairs of the payments expert group, so very active. And to all of you out there, if you're not familiar with Mobey Forum, have a look at their website, check it out. It's a fantastic community to engage with and to drive not only your network with inside of the banking industry, but also your expertise and knowledge and growth. Very good indeed.
And they are a global organization, so this goes to all of our people listening today.
Absolutely. But let's get on with the agenda of this show, which is, of course, the highlights of what has been happening in the world of fintech in the Nordic during the month of September. Yes, we're in October now. It was the month of September. So we're going to be looking back to the month of September, what has been good, what has been bad, what has been happening. But as always, Janne, why don't you say hello to all of our listeners as our resident Nordic fintech expert?
Hello, and great to be here once again.
Fantastic. So tell us, Janne, what has been the sort of overall trend in the Nordics around fintech for the month of September?
So in September, we could see that the weather was getting colder, but the market was getting definitely hotter. There was one exception now already for the third month in a row. There was surprisingly quiet on the funding side. I'm not even sure why is that. Should be worried about something or not. But otherwise, there were a lot of stuff going on. I think the biggest theme we could see in September was international expansion. So a lot of fintech companies going global, pan-Nordic stuff as usual, but then also new ventures in Spain, in Germany, and even Thailand. So it's safe to say that Nordic fintech is taking over the world. Then if we look at the partnerships that been made, of course, the surprisingly payments and AI were taking the news, but otherwise quite much regtech stuff, and then a bit more conventional things like digitalizing mortgage systems and so on. Looking at the banks, there were quite much news about the service disruptions, DDoS attacks, and then the challenger banks were in the news on a bit more positive side. Some new strategies and updates and solutions from Alisa Bank, Multitude, Compass Bank, and then also Avida acquired Santander's card business in Sweden. So quite much things going on that side. But very vibrant month overall.
Fantastic. When you mention expansion from the Nordics out into the rest of Europe or globally for a number of fintechs, not really a trend just for October, but the September even, but generally, do you see from the sort of Nordic fintech community, do you see a lot of international or American fintechs that are trying to expand into the Nordics? Or do you think the Nordics is too small for these US and larger European players?
US is quite quiet. I would say there are few more like very techy companies, like maybe on the cloud side, who are a bit interested from the North American side. Generally, on the consumer side, there are less companies coming to the Nordics outside of Nordics. But then if we go to the backend side, banking technology, so then we can see Central European and British companies. But if we look at the market here at purely end customer perspective, so it's pretty much Baltics and Nordics which are working around here crossways.
Okay, interesting. I'm not seeing an awful lot like you just said. I'm not seeing an awful lot of particularly American companies trying to get into the Nordics, and I'm wondering if that's because the Nordics is complex, right? We've got multiple different currencies. We don't have a huge amount of people compared to some other parts of the world. So it's a difficult market to get into, but at the same time, we're seeing a lot of Nordic fintechs actually getting large amounts of funding, strong growth. So it's an interesting dynamic. It's a captured market, right, for the Nordic fintechs. What do you think, Ville?
No, I mean, again, it seems to be a bit of a turn of events in my mind. I mean, we've seen this positive news coming from this region for quite some time, of course, but everybody was expecting this year to be kind of quiet. I think we even said that out loud in the beginning of the year, given the interest environment and so forth. But now, as the even the ECB is now signaling the interest rates going down, and they indeed have lowered the interest rates. Maybe we're kind of turning this around faster than we thought. So,
yes, all very interesting.
Yeah.
Let's see where it all goes. But back to highlights of this month. And as usual, let's pick out something that really caught our interest as we were reading through the newsletter from Helsinki Fintech Farm. Maybe we start with you this time, Ville. What caught your eye?
So some people might know I'm quite involved with central bank digital currencies in my day-to-day job. And indeed, it's a very interesting topic to follow. And of course, there's been a lot of discussion around that. But the flip side, of course, of digital currencies is the fact that the central banks are equally interested and invested in physical cash. And the news article that I picked for this week was the fact that Sweden's central bank threatens banks with legislation to protect access to cash. Now, some would say this is a bit ironic, considering the fact that especially Sweden has been front and center in moving into almost entirely cashless society, as we have seen. They've been the poster child, even for central bank digital currencies, for this exact reason. So e-krona was mentioned many times over the years when talking about who is most advanced in working with their central bank-based digital currencies. And the reason why this was always mentioned, or reason why they do this was always mentioned, that again, even the central bank was saying that we're moving into a cashless society. Now, Sweden's Ministry of Finance actually made a query towards the Central Bank of Sweden asking, so what is the status of cash at this moment? And the Central Bank then came back with this report stating that cash needs to be protected. And the reason why they said that and why they kind of turned around is that due to the absence of cash usage in the Swedish society in general, the services around cash have also started to disappear. There's only a handful, you could even say it's almost like a monopoly at the moment in Sweden and generally in the Nordic countries for cash handling. Now, if you only have a handful, one or two companies handling the physical cash handling, then that creates weakness and potential problems in the cost efficiency in managing these cash flows in the first place. And then the other side of that conversation, of course, is that the financially underserved, so people who are not able to get payment accounts or get access to digital banking services in general, they tend to still use a lot of physical cash. And if you're not able to even buy the basic necessities in supermarkets and places like these anymore with physical cash, that creates a problem of inequality in the society as well. Now, of course, the digital currencies are trying to solve this, but the central banks realize that this might be still a little bit far away. So they want to protect the physical cash usage for those people as well. Now, the bank's perspective into this, of course, is also interesting. The banks here in the Nordics, have due to this lack of, the move away from physical cash, have also reduced their cash services in bank branches. Even here in Helsinki or even in Finland, if you try to go to a bank branch and then find cash services, you pretty much have to line up in front of the only branch in a very large area if you want to get that done. Again, cash services have been reduced a lot lately. And this also is something that central bank now is pressuring the banks to move back into cash handling. And this is potentially a massive investment, of course, for banks if they're mandated to do that. So interesting times. Kind of we go around and come around in the question of cash. And now the central banks are taking steps back in order to ensure that physical cash remains. And interesting conversation, and not only limited to Sweden, by the way. We had a very similar discussion in Finland lately, even though Bank of Finland has not made any formal statements around the topic yet. But but again, the legal tender status of physical cash has been front and center as well in the conversation in Finland lately, and it's for the exact same reasons.
Reading through the news and thinking about it a little bit, I'm wondering whether there are other agendas here as well that aren't coming out very clearly. I mean, first of all, for merchants, cash is still a cheaper way of dealing with transactions, particularly small transactions, right? Because every online transaction or card transaction has a cost element to it, but then there are other elements of the cash management that has an impact on the cost to the merchants, the small cafes and everything else. Secondly, cash is still, and we've had this discussion repeatedly when we talk about digital euro and everything else, cash is still the only central bank backed liability, right? So in today's market, you take cash away, you've got nothing which is a central bank liability that people can hold and keep in their pocket. And the last one that I sort of wonder about a little bit is there is still an ongoing geopolitical situation. And, is this the central bank trying to make sure that people have a potential reserve if the geopolitical situation should get worse? The only thing you can really rely on is, either cash or gold or whatever the case may be, not necessarily the money in your bank account, because if things get seriously hacked, I mean, Janne just talked about DDoS attacks and everything else, at least to a certain degree, cash in your back pocket is safer than money in your bank account, dependent upon the geopolitical situation and everything else. So I'm wondering if there is more to this than just making sure that the unbanked has got some money to pay for their loaf of bread.
Yeah, they did mention in the article as well the resilience point on the physical cash. So again, if we run into some kind of crisis where only offline payments are possible, then of course physical cash is the best way to achieve that in the current system. And we can actually see examples of this whenever there is any sorts of crisis. The central bankers typically are advising that you should have at least a few €100 of cash at hand at all times, in just in case something happens with the IT systems that are running the financial system today. So that is true. However, Paul said something there that merchants perceive cash to be free or cheaper than card payments, and that's research not to be true. Physical cash handling is, at the end of the day, always significantly more expensive than digital payments. And while those are sometimes perceived not to exist, the longer you deal with cash, the more you will realize that it's not only expensive, but it's also very unsecure or insecure for you to handle cash. One of the reasons was also historically mentioned in Sweden, that one of the reasons why physical cash users went down so much was the amount of robberies on armed cars were delivering cash at one point in time in history. And of course, due to the lack of cash usage now, those robberies have gone down almost to non-existent at the moment. So yeah, again, there's multiple dimensions to the conversation of what is the actual cost of physical cash.
Yeah, I've got to admit, I have no cash on me or in the house. Maybe I need to, just for safety's sake, go and take out a couple of €100 and hide it under my bed. But let's see. The problem is you don't get interest, right? There's no compounding interest on cash under your bed, and I like seeing that compound interest on my money. So let's see what happens. But what about you, Janne? What did you think to this article? And do you have cash in your back pocket?
Do not have cash in my pocket. I probably have some spare cash at my house. And honestly, I think we've seen some, normal life situations where your friend tries to, pay his debt with cash, and you're like, no, I don't want that. Can you put it on mobile pay or something like that? Especially if they're using coins, so that's super annoying. But generally regarding the news, you mentioned the word ironic, and it truly is, because I remember some politicians in Finland were talking maybe 5-10 years ago that we should, as a nation, get rid of cash. It should be by law that, hey, now let's get rid of cash. And now recently the regulators, also now in Sweden, but in Finland, they have been also saying that, hey, we need to the regulators' job is to make sure that the banks are securing the cash services. So the regulator is on that side now. I'm not sure how strict the law, or how clear the law is on how the cash should be secured, because I think we are getting more and more banks and financial service providers who have zero intention to any cash services, a lot of retailers, They don't think about using cash at all. They don't accept cash, and yeah, that's where the trend is going. But yeah, now as you mentioned, the kind of reliability and also the central bank asset aspect is very interesting, and I think there will be much more like really discussion around this on the decision makers on like the political level on what's going to happen here. Maybe it will be tied to the CBDC discussion, or then it's a separate thing. But we're definitely like, without regulation, we would get probably quite rid of cash. But will the regulation be there to kind of keep cash circulating at some level? That's interesting, definitely.
Yeah, so one final point on this, because it's interesting. You mentioned, Janne, the link to central bank digital currencies, and that is actually, especially in the Eurozone, very much true. The reason why there was a lot of discussion in Finland, especially with regards to legal tender status and mandatory acceptance of physical cash, is that the upcoming digital euro legislation package is the one who is defining not only that the digital euro will be legal tender, but also clarifying the status of legal tender in terms of making it mandatory acceptance. Now, if you talk to the Finnish lawmakers, they're saying that even though that legislation passes, we would still have some national interpretation rights about the mandatory acceptance, especially to limit it into essential services or things like this. But if you read the law by the letter at the moment on the package that is coming, it means 100% mandatory acceptance across the board. And of course, that would be a highly interesting world where we not only have to build digital euro support across all acceptance points, but bring back physical cash acceptance everywhere. So yeah, interesting times, I would say. The timeline for that law, by the way, is beginning of next year, if the parliament picks it up, which of course is not certain at this point in time, but that's the plan. So again, looking forward to interesting times.
It actually brings up another small point, and maybe I'm just reading between the lines here and interpreting the discussion we're having. But could also this be related to driving a changed perception for citizens? I mean, a lot of people are walking around thinking that central bank digital currencies or the digital euro will be a complete replacement for cash, and therefore cash will cease to exist. Maybe this is a way for the ECB to demonstrate that it's not going to be one or the other, it's going to be a coexistence between both. And by strengthening the fact that cash has to remain in circulation, it gives a message of, look, cash won't go away, we're just going to give you two ways of representing a central bank liability.
Yeah, that makes sense. ECB especially has been very clear from day one that the physical cash is not going anywhere. It's not always going to be part of the financial system, as far as we can see, at least from year 2024. But maybe this indeed is a move to put some kind of meat around the bones of that statement. So again, trying to make sure that people really trust that central banks are keeping this position. So yeah, good point.
Fantastic. Janne, what did you pick up as your most interesting article for the month?
Yeah, quite much related to this. We already talked about reliability and security. So as I mentioned, there were a lot of DDoS attacks on the banks. So some weeks ago, Nordea, I think they were having kind of a scheduled maintenance break in the weekend, and then their services didn't quite recover from that. It was quite much in the news, I think, at least in Finland and Sweden, that what's the problem there? Is it some of their own issues? But then they later on revealed that there were a lot of cyber attacks. So if listeners don't know what's DDoS, so it's a distributed denial of service attack. Basically, bad guys are creating a traffic jam on your online services, so the customers cannot use the services normally. But that was lasting quite long, and it was in the news. Nordea wasn't very open in the beginning, which I think is part of the game when you fight against the cyber criminals. But the disruptions were now exceptionally long. People got mad, and I do think there were some other banks as well. OP had to limit some of their service availabilities, but this again brings the big question about the resilience and the potential downsides of digital services. So for instance, I know people who's if you have only one way to do strong authentication, then you need to log into some healthcare services or something like that, and that service provider is down. So then you're kind of there's no way to log in and things like that. So I'm personally quite supportive for digitalization. I think safety concerns are for boomers, but this is quite a good reminder that there are these threats. And now there's been a lot of discussion. The FSA has been raising concerns. The politicians have been raising concerns. So yeah, whose responsibility is it? Should the banks be more resilient? I know we have things like DORA regulation and things like that. Or should the consumers be more prepared, have multiple authentication methods, multiple card providers, cash, and things like that? What do you guys think? How should we improve this game, and who's in charge?
I've got some perspectives here, but I'll pass it over to you, Ville, sitting on the bank side. What do you think?
Well, predictably, I cannot comment anything about the Nordea situation. We can refer back to what Nordea's official communication on that. So again, I'm a little bit hands-tied on that topic specifically. But on a general level, first of all, DDoS attacks are incredibly difficult, if not impossible, to prevent completely. There's in this connected world today, these DDoS attacks are coming from millions and millions of devices all around the world, and then basically limiting the traffic from all of those things, and it just takes time. The good thing about DDoS attacks is that sustaining that is also very expensive. So you might be able to knock down a resilient service for a while, but it always recovers. You cannot really sustain that for a very long time, at least not for weeks or months. So yes, having the disruption to any service for a couple of days in this well-orchestrated DDoS attacks is an inconvenience, and is sometimes even critical when you cannot do things like digital signing of documents, or you're not able to pay a bill that is due and things like this. So there are real consequences to these things. So it's, of course, a very serious thing. And I would presume that the banks are already doing fairly a lot of investments to make sure that the recovery is always as quick as possible from these DDoS attacks. And I feel that there's maybe not the need to regulate these things, and you need to be better prepared for DDoS attacks. Well, yeah, what more can we do? So again, I don't think the regulation is not really necessary there. As soon as you reach a status of a trusted infrastructure provider in terms of identity or anything in financial services, and you reach a certain scale, you have to comply to this. You have to be ready for these types of things no matter what. And I'm unsure whether regulation is going to change that in any certain way. But in this kind of doomsday scenarios, I started thinking when listening to Janne that there's also another set of resilience mandates coming our way, and in Finland we call it the obligation to be prepared, varautumisvelvollisuus, and that means that they're building redundant infrastructure inside Finland in a case where we would lose connection to the outside world. Now that's presuming that the outside world blocks Finland for whatever reason. I would argue that we have bigger problems in that case than the financial system even. But I wonder, in a case where the country is under attack, could we close our digital borders and still function as a society? So again, closing all the traffic from outside Finland in order to protect from things like significantly harmful DDoS attacks. Of course, that's like a massive weapon to be using against a thing like that. But I wonder if it will be possible on some level if the infrastructure is ready for that. Today, it's not, for sure. We are so dependent global services, cloud, etc. But maybe in the future, question mark.
I think currently there's a lot of the Finnish services, particularly when we talk about the sort of core infrastructure of our capabilities, public services, etc. A good amount of that, as I understand it, does sit on hardware in Finland, but it is dependent on hardware outside of Finland. So until we get to a point where we can sustain the full capability of our services locally within inside of our borders, both from an infrastructure perspective, but also from a management operation and everything else, you're absolutely right, it's going to be very difficult to do so. But it makes sense, right? Particularly in the current geopolitical situation that we're in and the location we are in relation to some of these countries, it might be a good thing to consider how we can sustain our infrastructure should we lock our borders completely from a internet and networking perspective. But you're also quite right, Janne. You talked about the fact that, here in Finland, particularly, all of our online identities when it comes to public services and everything else is managed by the banks. So therefore, when we want to log into the tax office website, we do it through our bank credentials, our digital identities with one of the banks. Actually, there are some other providers as well, but generally for most people, I think it is. Yeah. It is through the banks. So if the bank does have an issue, then you're right, you get automatically locked out from everything else. And it got me thinking, and you've been partially involved in all of this at a larger scale, Ville, but as we move more and more towards an infrastructure within Europe that has a digital identity for you, and that's across Europe, do we end up in a accelerated or larger potential risk of this across the whole of Europe if, the right people manage to hit the right capabilities to stop us being able to log into services and anything else because our identity has suddenly been hit in one way or another?
Of course, the centralization of these identities in terms of especially the European digital identity is, well, it's a single point of failure in a sense for the identity system, becomes a very nice, interesting honeypot. But that being said, the way the EU digital identity is being implemented right now is that each country will have their own national solutions. So again, it will not be like one single service for the entire Europe. All the countries will have their own, and I'm sure especially the resilience factor has been taken into account in most of the European countries mandated to do this. So again, probably going to be nationally deployed, maintained and operated. Of course, also the fact that it's a European-wide initiative means that all of these systems will be compatible with each other. So again, the interoperability is guaranteed to the regulation, which of course is a fantastic thing. But yeah, of course, as we move into more and more digital world, also in the identity space, these vulnerability surfaces are becoming larger and larger all the time.
I hear the blockchain fanatics screaming from the rooftops. Decentralization is the answer. It will solve it for us all, right?
Yeah. Show me a decentralized blockchain other than Bitcoin.
Exactly. Wonderful. But also, Janne, as a last point, as you pointed out, I mean, we are getting more and more digital. We in the Nordics have been digital for quite some time, but we're getting more and more digital. And there is always going to be a large population of bad guys out there. There's always going to be criminals. There's always going to be people looking for easy ways of defrauding others. So I think it comes down to, as banks move more and more to digital, they need to be more and more focused on how they're going to deal with cyber resilience and cyber criminal activities in every single form. And not wanting to, again, promote Mobey Forum, but Ville, we sat through two very interesting presentations at Mobey talking about the growth of deep fakes and other new ways of defrauding individuals out of their hard-earned money and savings. And myself, I have to admit, it was an eye-opener. I thought I was fairly good at understanding technology and the digital world we live in, but it actually scared the living daylights out of me seeing those two presentations.
100%. Shout out to my colleague Sara, who gave the presentation on fraud in the Nordics. Again, very eye-opening.
Yes.
presentation for many. And the sad fact is that the social engineering is becoming so much cheaper and easier due to generative AI capabilities these days, that it's becoming a bigger and bigger problem. And due to the nature of social engineering, defending against these attacks is also very difficult, because again, in most of the cases, it is the person who is convinced to do the transaction in the bank. It doesn't matter how much technology you throw at that problem. The only way to fight social engineering is through social means. So you have things like, of course, trying to create awareness around fraud, and then doing a bit of more friction again into the payment processes, which to a certain extent, of course, sounds good from fraud prevention purposes. But I mean, you and me, Paul, I mean, we've been working in fintech for decades now. And what is the thing that we've been trying to achieve from day one? Remove friction from a lot of the things that we do. So it's completely counterintuitive to now add friction again due to the fact that social engineering fraud is so commonplace. So yeah.
You can add friction in a way that's supported by the consumers. You know, two-factor authentication is something that generally people have got used to and actually believe is a positive. So sometimes if the friction is put in the right way and with the right messaging, I think it doesn't necessarily break the experience for the customer. It's when it gets overloaded and complex and difficult to deal with that the consumers get frustrated.
Yeah, so I think it's really the cool-off period that we're talking about as the friction. So again, if you make a payment to a completely unknown person or a new bank account, then there's a 2 or even 3 day delay before it gets processed. So you do still have time to, for example, when the bank detects that that this is probably a fraudulent transaction, you still have that 2 or 3 day thinking period before you absolutely confirm that the transaction needs to go through. It doesn't help in all the social engineering cases, of course it doesn't, but maybe it could reduce it. Again, all means are necessary because this is really exploding right now.
Absolutely, yes. But moving on, the article that I picked up on, lots of interesting stuff that has happened during the month in the world of fintech here in the Nordics. But as everybody knows, I've got a deep-rooted passion for embedded finance, banking as a service, and the growth of the platformification of the banking industry. And I keep looking at a couple of what I will say are becoming poster childs or poster children in the Nordic region. We have for years now all been singing the wonderful graces of SEB Embedded, SEBX, and what Christopher Malma had managed to grow there, although now he is moving on, but still staying with inside of the large corporate of SEB. But there's a new kid growing on the block, and this time here in Finland, Elisa Bank, not a new bank, quite a small bank, but they are aggressively moving into the space of banking as a service and embedded finance. In actual fact, they released their updated strategy during the month of September, and they are really going 100% into this notion of embedded finance and banking as a service. It is the driving point of their new strategy. Very much focused on the SME market space, very similar to what SEB did with SEB Embedded and SEBX. I think that when we look at the growth of embedded finance, whilst a lot of banks and people are still looking at this from a retail banking perspective, I do not think that that's where the big money are for this. I really think it is in the SME space. It is for the small corporates, as well as some of the larger corporates. I truly believe that things like trade finance will see an interesting boost around embedded finance. I think corporate banking will see some interesting boosts here. Not so much the retail space, although it's easy and quick to do, an embed payment or something else. But that's not where the new stuff is going to be for these kids on the block. So really interested to see Elisa Bank are very much focusing in on invoicing, invoice financing, and like I said, the SME market space. But I believe we're starting to see a change in the tides here. And I've said this before, I mean, no disrespect to our fantastic banks in the Nordics, but I think you've been sitting on your laurels. I think you're partially a little bit arrogant and thinking that this is not going to come and it's not going to be that big. sometimes it is the slow change that catches you off guard because you think it's not coming and you don't see it coming, rather than the big bangs that shock us all. So I think this is exciting, very interesting. I look forward to seeing where Elisa Banks takes this with I think they acquired, was it Puro Financing very recently as well. So lots of interesting stuff here. What do you think, Janne?
Yeah, absolutely. Very, very interesting to follow. We have discussed this slightly earlier, but now having a bank who's putting seriously effort on this area. So far, yeah, we have from the big boys, SEB has the SEBX, SEB embedded. We also seen a multitude taking steps toward that direction, and then also in Estonia, LHV, and now fellow bank focusing on that side. Their focus is particularly on the SME financing. I think what they have been up to mostly is that they have been partnering with accounting tech and accounting providers, where the accounting firms can provide directly financial services to their customers, and Alisa is the bank behind that. And I'm very curious about seeing how this will evolve. I see a lot of potential, but of course, so far it's not been a very big business. So let's see in a year or three what's coming out. And the question is, if this is taking off, what will the big banks do? Will they jump into the same playground immediately, or how it will turn out? But I'm really excited to see what's going to turn out.
No, absolutely. And Ville, you and I, we've got fairly similar views on this growth of platformifications in the banking industry and embedded finance. In actual fact, we were part of a fight club in Copenhagen, was it, last year, exactly talking about, will this drive new business models for banks? And I think we're starting to see that. I think, driving out a completely new strategy for an existing bank focused around this fundamental change is demonstrating that new business models are emerging out of the back of this. What do you think?
Yes. So first of all, agreed. I guess the cliche saying is that how did you get disrupted? Slowly and then suddenly. So again, this is the slow phase. Definitely, we're seeing Alisa Bank, like we already mentioned. We'll be talking about Alisa Bank many times on the podcast before. They are clearly on this path of banking as a service and embedded finance. Especially interesting to me is the fact that they're focusing on the SME segment, which is traditionally completely underserved in most of parts of the world today. So again, our opportunity is there. But that being said, the reason I believe the large banks are maybe dragging their feet a little bit on this topic is that they understand that the business is not there yet. If you look at, for example, Alisa Bank and all the other related players, they have not been able to consistently turn a profit, even in an environment where that's very favorable for banks at the moment due to the environment that we have right now globally. So yeah, remains to be seen. These banks are making these investments in this space, and whether or not this is the start of something really big for them is an interesting journey to observe. But as long as the you can consider the kind of buying side of this market, so i.e. the digital service providers who would embed these services into their own services, as long as that is not wide enough and that competence in that buying side is not wide enough, the banks will continue to move slowly towards this direction. But I do still share the view with you, Paul, that this is however long it takes, it is an inevitable new frontier for banking services due to the fact that it's just so convenient to deal with financial services when it's part of your day-to-day user experience, and doing that in a safe and a secure way that protects your data, your money, and your identity, of course, is critical. But yeah, it will take perhaps more time that we want it to be taking, but it's going to happen sooner or later.
I think that's another dimension to this when we're talking to the large banks, and that is, you're absolutely right. It's not exploding today, But it's also one of those things that by the time it does explode, if you haven't done anything about it, you're too late. The train has left and you're going to play a horrible game of catch up. So for most banks, I think it's better to have, one hand in the pie than to stand on the sideline and watch everybody else thinking that you're going to be able to catch up when things move along. And we've had this discussion about the digital euro as well, right? It's going to happen. We don't know quite when, and we don't know what that explosion is going to look like. But if all you're doing is standing on the sideline watching the tide go in and out, you as they say, it's when the tide goes out you see who hasn't got their swimming trunks on, right?
Yeah, and then the tsunami is next, right? But when the water recedes, then something bad is coming. The digital euro, again, since you mentioned that, you're right. I mean, when you talk to most banks around Europe, their opinion seems to be that we don't need to look at the digital euro. It's quite likely not to happen, and that might indeed be the case. But I would still put it around 50% likelihood that it will happen. Now think about it. There's a 50% likelihood that you will lose your banking license. Would you believe that take those odds and do nothing, or maybe try to understand how can we survive in an environment where it does happen instead? So maybe a shout out to all the banks out there. You might want to be looking into digital euro.
I like that one. If there's a 50% chance you might lose your banking license, I mean, that's a wake-up call to anyone, right? But moving on to something a little bit lighter and happier, as always is the case on our beloved little podcast here, we always like to share a good but bad joke, Ville at the start, me at the end. And as we have Janne with us, we always give the honor and pleasure for him to share with us a good but bad fintech related joke. So Janne, have you managed to dig deep and wide and found us something that we will cringe at?
Yes, but you have to take the happy word back.
Okay, no happy.
Got it.
Okay. Yes. So a group of recently deceased people arrive at the pearly gates, ready for judgment, who's going upstairs and who's going downstairs. So then the devil shows up and starts calling his customers. Murderers, over here. Thieves, you're next. And then all the people who invested in OneCoin. And then there were surprisingly many of them, and the devil was like, whoa, there's a lot of you, but don't worry, you can all fit in if the hedge fund manager just squeeze in a little bit.
These are getting better. Getting better. Thank you very much, Janne.
Thank you for that OneCoin reference. I love that.
So with that, we are getting close to the end of another episode. Before we move away, Janne, is there any final words you want to share with anyone?
Yes, I could share a few things. Also on our news recap, Fintech Farm has started a partnership with Samlink. Great. And what's up next with Samlink?
Oh, you want me to share on that one?
Yeah.
Yes. So we for Samlink, I don't generally like to promote my employer on this. We're independent, just like Ville doesn't want to shout too much about Nordea. But Samlink has released a new paper on generative AI in banking, and we're going to be having a breakfast seminar in later in October in partnership here with Helsinki Fintech Farm. So check it out online on the website. Janne, if people want to talk to you more and find out more about Helsinki Fintech Farm, how can they reach you?
Yes, so you can get directly in touch with me through LinkedIn. Follow also our LinkedIn page, Helsinki Fintech Farm. Also our website, helsinkifintech.fi. You can subscribe to the newsletter and also check the event calendar. There's quite many things going on site, but also online. And remember to sign up for the Nordic Banking Forum also 28th of November. You guys will be also there. So that's another great place to meet. And I think it's also worth it to come from abroad to Finland, see all the colleagues, great atmosphere and nice November weather as well.
Absolutely. Ville, any final words from you?
The usual. You can find me on LinkedIn. You can also find me on Threads. I'm still to make my first post on Threads, but be there when it happens. It's going to be a monumental event. So again, LinkedIn, Threads, find me there. And as usual, in the different kinds of banking conferences around the world, come and say hi. I always enjoy the conversations with everybody.
Absolutely. And yes, Threads, I have got my Threads account. I'm not very active there yet. And I think we need to look at moving fintech daydreaming over to Threads as well. So let's set up a channel for us there for the podcast. Me, you can find on LinkedIn as always. I am there, very active, but more importantly, you can find Fintech Daydreaming on LinkedIn. You can find us on YouTube. You can find us on all of the normal preferred podcasting channels. Please hit the like button, hit the subscribe button. And as I always say, do us a favor. Share the podcast with just one friend. Help us get one new listener. It's always wonderful when we see that someone has hit the subscribe button. It gives us a little tingle and we feel proud and happy about what we do here and wanting to share more with you going forwards. We will be back in 2 weeks' time. We've got a fantastic guest lined up, Ville and I. Until then, this has been Fintech Daydreaming.
This is Fintech Daydreaming.